The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 10th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we go get to look at the circumstances of these markets. We're going to go figure out what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon, East Coast time. I want you to know that I'm absolutely grateful for your presence, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in 877-927-6648, internationally 727-445-1044. Let's go ahead and get this terrific Thursday show kicked off. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 151 points. She's trading out at 16,848. S&P off 17 points, trading at 1972. NASDAQ Composite off 58, trading at 46.15. Russell 2000 off 15 points, trading out at 10.56. You've got gold, $14 to the upside, trading out at 12.71. Silver up 18 pennies. That's trading at 15.55. Light sweet crude back 56 cents, trading out at 37.72. Dollar wise to the upside, lead the charge. Individual stock, you're looking at Dollar General up $6. That's up 8%. Universal Electric, yes, that's what it is. That's up 10%, up $6. You've got Westar Energy up $4. Equinix up $4 as well to the downside. Priceline is the leader dollar-wise to the downside, off about $14, a little over 1%. Barrett Business down $13, 36% to the downside. Yikes. Amazon off $11. Credit Acceptance Corp down 11. J2 Global down about 950, Tesla off 750. So we have plenty. Oh, how about the currency market out here? U.S. dollar index, I have a 10-minute delay, but it's up over a full buckaroony out here. It's trading on to 96.12. Lots of movement in the currency markets, whether it's a hard currency, soft currency, you name it. We've got movement out here. So let's begin the day by taking a look at the one chart that you and I have looked at. We've looked at a number of them, but certainly one chart that you and I have been looking at for the last several days, the one that I said you were probably blue in the face or something along those lines because we were tired of looking at it. Well, we're sort of tired of looking at it because it wasn't providing us with a ton of information. That was the NASDAQ. We have said it's all about the NASDAQ, all about the NASDAQ. So let's go check out all about the NASDAQ. What does that mean? Well, if we take a look at where it's traded, this is the NQ. This is the daily chart, by the way, that we're taking a look at. We know that for the past 2, 4, 5, 6 days, we've basically had just very small bodied candles. Certainly the first 3 days from March 2nd, March 3rd, March 4th, struggling to get up over that resistance level. 2 high wave candles, 1 doji candle. Resistance, by the way, again, being 43.50, 7.58 from the daily standpoint, 43.53 from the weekly standpoint. And now what we've got is we've got to move lower. We've got to move lower in earnest. Take a look at this line right here, okay? My data box says MACD. It's really not the MACD. Now, the MACD is simply the difference between 2 moving averages. So it is, in fact, a MACD line, just not necessarily the way that you take a look at it. Now, what this is showing you and I is the difference between a 19 and a 39-day exponential moving averages out there. So here's what we know. If you see the reading right now, minus 0.715, and yesterday, minus 0.730 out there. Well, guess what? Minus 0.715, a little bit less, right? A little bit less. We've got that oscillator turning down below the zero line. That's the white line that is on my screen. I had to change it to something other than white just to make it a little bit easier for you to see. So let's do that. Let's change that oscillator line let's change it to yellow, the center line to yellow out there. There we go. Now you can see it. Now, when a price oscillator moves down below, when it turns down below the zero line, that's as bearish as you can get with regard to utilizing that tool. So inside the NQ, which has not provided you and I with a ton of info, well, it's let us know that it stalled, the market was not breaking out to the upside, right? So the question maybe people were contending with, hey, should I go ahead and go along the market out there? And this message was saying, no, you shouldn't. You're so close to resistance. Why don't you wait for a breakout party? If you break above it, then you can go along. And if we take a look at what it's done here on a daily basis, we've got that oscillator turning down below zero. Now, what does this mean? Well, number one, it is about as bearish as you can get out here. Number two, this would suggest to you and I that unless we see some kind of recovery here in the next less than 3 hours, recover meaning that you would see the NQ somehow get back above the 42.79 area, and you're trading right now at 42.35. So possible, but not looking likely at the moment. What this says is the NQ is likely to make a move down to about 41.89. Any move below, any close below 41.89, and you've got to move down to the 4057. So the one thing that you and I have been blue in the face on from a daily chart perspective and the thing that can lead the markets lower is, as it could have led the markets higher, is in fact the NQ. So where this finishes the day will be important, but as we speak right now, 1:12 in the afternoon, this is not a bullish sign. If you are long the markets, that's fine. Just make sure that you are using stops. If the question is, and one of the questions came in, said, hey, should we go long the market, specifically with regard to discussing the QQQ ETF out there, the answer is no. This message right here is absolutely, positively not. This is a potential topping message out here with regard to an oscillator turning down, price oscillator below the zero line. Now, that's what the NQ is doing. A little different message, a little different message if we take a look at the Dow out here. Now, in the case of the Dow, in essence, what it has done, it's completed the pattern, right? We had this little consolidation, this little yellow box, this little yellow square down here, and we have to give it a little bit of room. And what it did in the earlier this morning after the ECB announcement, that looked like it was going to be a party, it ended up, in essence, completing its measured move. Now, the measured move I had here has got a price point of 17,285. It didn't get all the way up there. The high was 17,174. Really close enough. The top of its, or the bottom of its TAS weekly profile, which old support has now become new resistance to the best of our knowledge out here. That priced at 17,213. Again, didn't get up there, but we've got a key reversal session now. Big key reversal session inside of the Dow futures. Why? Because it was able to get up and above the prior session. It's now traded below. All it has to do is trade one tick in the to the red, meaning below the open, and you have a key reversal. Different than an outside day. Totally different because we are coming from an extended condition. Now, in the case of the Dow futures, 16,576 happens to be its a TAS daily profile. If you close below that, it opens up the expressway inside the Dow for it to travel lower, because there are no weekly profiles to the downside. This is the daily. So 16,756 is going to be one level that we want to watch. When we come back from this break, we'll go look at the second level. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 144. The chart that you and I are looking at right now, and continuing the story of what the market is communicating to you, happens to be the Dow futures contract. Now, inside the Dow, so we already know the NQ, which has been very quiet over the last 6 trading sessions, has given us perhaps one of the more bearish. It just absolutely has given us a very bearish message. Now, we don't have the exact same, but we don't even have close to the exact same message inside of the Dow futures contract, the S&P futures contract, the Russell 2000 futures contract. Right now, we're going to focus on the Dow. And the reason is you and I have been looking at a declining tops pattern inside its advanced decline level out there, which has been saying, caution, caution, caution. You and I have discussed this quite a bit over the last 4 or 5 trading sessions out here. So when we take a look at the Dow, the question is going to be, Dow futures contract, can price hold 16,756? If it closes below that, then it's off to the races. Now, off to the races would mean probably to the back of the consolidation box, somewhere around 16,367. But there's nothing really there that says that would really necessarily hold price. In fact, I would say there's not much there that says that it holds price. However, there's another line that we want to be paying attention to inside the Dow. This is the continuous contract that I'll put up on my screen. The reason is because I need so much historical data in order to calculate these little lines that you're seeing on my screen out here. Now, I want to go back and point out one thing on this chart. Unlike the NASDAQ, which price oscillator has turned down below zero, the Dow futures contract is still rising. Let me put this little data box so you can see the data box off to the side there. If we look at yesterday's reading, you'll see it says the MACD level 88.52, and if we take a look at today's 94.03. So this has not turned to the downside, unlike the NQ. So the battle is on here. A level that would be natural when we have a breakout like this inside any kind of market, when we get the convergence of these 3 little lines out here, when they happen to cross, and inside the Dow futures, let me get my crosshair out here, that crossing came right about here on March the 4th. The level that is there is 16,778. If we see a close below 16,778, that price oscillator that you and I just looked at will turn to the downside. It will go ahead and join the NASDAQ. It'll still be above the zero line. But if we see it close below that 16,778, then its message is curtains. That would just be telling us that at this stage here, more likely than not, it is joining the chorus of the NQ out there. And if we go over real quickly and we take a look at the summation index, the advanced decline oscillator inside the Dow, there's the level. So we're going to be watching it today because the close, this is really an important tool with regard to the close. I don't have the 8-ball that tells me where the market is going to close. I do know what it is that we need to be looking for to truly give us the message of the markets. If, in fact, the Dow trades higher by 4 o'clock and this advanced decline oscillator is up above the zero line, it is not a bearish message out here. But we want to be paying attention to what's going on inside the Dow futures contract as well out there. So hopefully that assists you with regard to what is going on inside of the markets. We really don't need to go look at the ES Mini or the Russell 2000 at this stage of the game. Maybe we'll just go look at the SPY and we'll take a look at the IWM, not for the same messages, but just to look for other messages as well. But that's what's going on for the most part with regard to the indices out here. And we'll take a look at if we get the Dow and we get the NQ both giving us the same message, then expect the moves lower to continue out here. If we take a look at what's going on inside the metals market, I've made a big deal about the fact that I believe that that gold and silver are forming a significant top out here. That opinion has not changed one iota. I'll show you why. If we do take a look at gold, though, you've got gold trade on it, and I'm going to share this with you because I do not want you being trapped like rats out here. And that's what I believe is going to go ahead and take place. But I'll go ahead and lay out my case, or what I believe not really my case, but what I believe the message of traders are out there, and then you make the determination. Positive with regard to gold, if we take a look at it, you've got right here, you've got it trading above its weekly market profile, 1263. I don't really care if it's trading above that level or not. If we take a look at what gold has done here, ever since that February 11th area, so you're looking at 2, 4, 6, 8, 10, 12, 14, 16, 18 days out here, we've seen gold almost trade in somewhat of a horizontal range out here. Now, who is doing all that buying? You got to, with regard to all the currency, who's doing all the buying? Do you think we can answer the question, who has been doing all that buying out there? The answer is that you and I actually can. This is a futures contract that is trading out here. And if we go take a look at, now the cool thing about the futures trading is the CFTC, Commodity Futures Trading Exchange. The CFTC out here has provided us with good data. I believe it's good data. It's data that has worked in the past. There's no reason to anticipate that it won't work in the future. Now, most of the time when you hear me reference this data, and I apologize, I had put together a chart earlier. I've been having a few system problems. I don't know what the heck happened to the chart that I had posted in the earlier, but it's gone from my system out here. It's hiding. So I had to, oh, there it is. What the heck? It was, you know where it was hiding? It was hiding right in front of my eyes. There it is, as a matter of fact. Okay, so let's pull this back out here. That is, what do you call that? That is a... when somebody says, hey, honey, go get the salt. And you say, where's the salt? And they say, it's right in the cupboard. And you go to the cupboard, you look at that, you say, there is no salt here. And then, of course, that person comes over and they show you the salt that's sitting right in front of you. There's a specific term. It's escaped my mind, but it'll come. It'll snap back to me. Hey, let's just go back to this chart. I posted this chart earlier. Normally, when I take a look at the hysterical blindness, says one person. No, that's not it, but that certainly does sound like it. But there's actually a technical term for it. But let's get back to this chart here. What you're looking at is the gold contract, continuous contract, weekly, because I've got so much data. We need to have this data out here. Now, normally, what I do is I for the most part, I'm looking to see what the large money traders are doing. The CFTC breaks it down into 3 groups out here. I really focus on 2 of those groups. Groups like me, which they like to term as non-reportables, okay, and what the big money is doing. Groups that they refer to as the commercial traders. Now, they provide you and I with a ton of information. The bottom tool on my screen out here, because they basically consider everybody to be net short, and we just simply have to determine what their positions are as a percentage of open interest based on we're looking at the values of their net short positions. Now, the question with regard to who's been doing all the buying and who's been doing all the selling out here, the sellers have been the big money traders, what is often referred to as the smart money, which I believe in this stage here, they are the smart money. You see, at the bottom, right back here in December, the week of December 17th as an example. If you look at the bottom portion of my screen, actually the commercial traders had gotten to the least net short position. You correct my grammar if you will, but the least net short position going back at 10 years at least out there. And that's the blue line at the bottom of my screen. That was a signal to me that and all of my clients out here that gold is going to make a significant bottom. Can you argue whether or not gold has made a significant bottom? It most certainly did. It's a matter of trying to time that bottom out here. But that is what commercial traders were doing. Guess what the non-reportable, the Utes, we were talking about Utes yesterday for my cousin Vinny. Think about what all the Utes were doing at the same time. Were they getting less net short or more short? There, this portion of the screen up here, they kept moving to higher short positions. Wrong side of the boat. When we get back from this break, let's go see what side of the boat the Utes are on as we speak right now. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. That word I was searching for was scotoma. I knew I could remember it. I just had to really think about it. And really, I could read you the actual Wikipedia explanation for it, but it is just simply something that is sitting in front of you that you don't see. Very much like us traders inside the markets here. I don't want you having a scotoma. That's why we're taking a look at, and that's why I just lay out the evidence of what the charts are communicating to you and I. You've got to be the jury to make a determination as to whether or not this evidence is worth any information to you. But what I can tell you, before we went to the break here, we know that as gold was making its last bottom, how about the bottom before that? How about the bottom before that? They have a similar pattern out here, just as they do when gold was making its highs out here. Commercial traders really doing the same thing, getting to more net short positions, which is exactly where they're at as of last Tuesday. Now, it's really the data that's released on Friday, which is of the prior Tuesday. That means tomorrow's data will be of this past Tuesday. It won't contain the trading from Wednesday, Thursday, today, and or tomorrow. But what they have been doing in a rapid way off of that bottom is they have been moving to a level that has been consistent where tops begin to form inside of the market. Likewise, what has the non-reportable, the small guy who gets to the party too late or stays at who is buying is the question. We can clearly see as a percentage of open interest that it is the big money that has been selling, not buying. If they were buying, they would be getting to a less net short position. That is not what they've been doing. They have been building up their shorts here. And what has the small individual trader been doing who is going to get trapped like rats? They're going to get crushed. They're going to get rolled over, just like they did back here when they were believing this. Back here, by the way, is January in 2015, as they had been building up and getting to a less net short position. Again, I'm referring to the reportables, as the large commercial traders were doing what? Getting on the exact same opposite side of the trade. It couldn't be any more evident to me as to what's going on. It's not a matter of if. No, it's not. It's just a matter of when. Yeah, it's not a matter of with out here, of with. Now, take a look at the non-reportables out here are down to levels that are actually below the last time that top was put in back in January 24th. They're going to get just crushed and run over. If, in fact, the large commercial traders, because there was a great question that was posed inside the Tiger's Den. What if it's different this time out here? If it is different, with the large money having built up this more short position, you would see big breakouts above these levels of resistance out here, and we have not seen it. What they are doing, can I guarantee it? I can guarantee it at about 3:35 tomorrow afternoon. It takes me about 4 or 5 minutes to open up the file. Go ahead and post the information on my screen. But probably about 3:35 tomorrow afternoon, I can then guarantee you, which I'm pretty sure is what they're doing out here. There's no reason to believe differently. What they are doing is they are the ones that are selling into this. They probably, so it's just a matter of when. It is not a matter of if, and that is who has been doing all of this buying. We saw it. That is who is doing all of this buying. Take a look at how quickly over the last couple weeks here that they have been moving to this by hopping on this train and trying to get to the long position inside of the metals. That doesn't mean that it's over and that's it and it's done with, but there's going to be some type of retracement. It's going to be deeper than most people believe. And if you don't believe me, it's possible, I'll throw out there, that you might have a scotoma, because there's all the evidence out there with regard to what is going on inside of that market out here. So I just want to make sure, and we'll see how it plays out. If I'm dead wrong, I'll be the first to say it out here. I'll be dead wrong. Okay, silver is up 20 cents out here. It's trading out at $12.73. Let's go take a look at light sweet crude. Yeah, light sweet crude here this morning. Let's take a look at light sweet crude. That got up to a level of resistance. Yes, there we go. That got up to its, is it the weekly? Yeah, it's got up to the bottom of its weekly TAS market profile. In fact, it did that at 8 o'clock, as if prior to the release of the Fed announcement. So this was really kind of interesting to watch, in my opinion. And if we take a look at what light sweet, because we know the directional correlation between light sweet crude and the market. And as soon as Mario Draghi's comments came out, what we saw, the futures market rocket to the upside. We saw the U.S. dollar index rocket to the downside. We saw gold rocket to the the U.S. dollar index rocketed to the upside. We saw gold rocket to the downside. Light sweet crude basically just said, tag, that's it, I'm out of here. It went up. It just tagged. It did the high five to the bottom of that weekly TAS market profile and then started moving lower. Now, what's interesting here over the course of the last couple of hours is 135. We have seen that light sweet crude has come down and it has found support, not at any specific level. Maybe it's a retracement level. Again, it's a 30-minute chart that we're looking at on the screen, but take a look at it now moving to the upside out here. And if we take a look at our futures market, if I take a look at the upper portion of this chart out here, guess what? Take a look at it. It hasn't really been doing much other than what it's found support at is 1974.95. So you and I, we looked at the NQ, we looked at the Dow. Now is going to be our opportunity here to take a look at the S&P futures contract. As we take a look at the S&P futures contract, what has it done? It's really come right back to a very important level of support out here. Now, it's a 30-minute chart. You can see that this level here, there we go, has held as support in essence, or it's danced around the support level for quite a while. Today is what, March 10th? Come on, it's got above that level of support, really been above it since March the 2nd. So we will see if in fact, if in fact it holds 1974, I mean the ES mini out here, and light sweet crude is able, now it's bounced just a bit out here, and this is where we're going to really learn a bunch of information, because it's not like it's a tick for tick correlation. It's a directional correlation. By the way, we're on day 6 out of 7 yesterday with regard to the closing direction of price in light sweet crude matching the closing price of the S&P 500. But the other side out here, the bearish case, because we know the Nikkei, we know that the NQ has given us that bearish signal. What's going to happen, and it looks to me like light sweet crude is going to make its way up to that 38.50 level again. It's at 38.18. There's no reason for it not to do that. Is it going to go ahead and turn down? Or is light sweet crude going to break above resistance out there? I don't know the answer. I just know that we want to be watching those levels out there. Okay, so that takes care of gold, light sweet crude, takes care of the ES mini as well. Let's go take a look at the VIX index, see what kind of message that it is providing to you and I. Give me a moment here. Where is it? There we go. Here's the VIX index. The VIX index right now trading out at a price point of 1924. It looks to me like the VIX is, based on looking at this chart, it's likely headed to 2059. At 2059, that's where you're going to get the real message of the markets. If that level acts as resistance, that's a 50-day exponential moving average out there. Then we're going to have to look for support inside the S&P 500, the ES mini, and so forth. If we see a move above or close above 2059, then all holy heck can break loose. Way more than what it is that you're seeing today out here. If I take a look at what the VIX one-day rate of change has been thus far, only 4.5%. So it's up 84%. It's up 84 pennies. Up 4.5% out there. Not a big deal. Nothing that suggests that there is some kind of one day greater than 10%, meaning a bounce coming in the next 24 hours. This is Steve Rhodes with TFNN. Dow's off 111, S&P down 12 bucks. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 120 points. The S&P is down 12. I mentioned earlier, we would maybe take a look at the IWM and the and what else? Oh, and the SPYs. Well, we took a look at the ES Mini, but let's at least take a look at the IWM. 32 million shares to the downside, off 135 points. We know the IWM here has completed a 1-to-1 A to B. No, 1-to-1 point. Yeah, 1-to-1. 1-to-1, 1-to-1.27 A to B equals CD to the upside. So we know we've got a completed pattern out there. Let's go ahead and delete the A to B equals CD out here. We know that if we take a look at its market profiles, that's the IWM we're referring to, support is priced out at 105.22 on the daily time frame. Right now we are trading at 105.44. The low so far has been 104.81. So it's important for the IWM to hold that level of support. Its price oscillator, which is out here as well. Yesterday's reading was 0.21. Today, as we speak, is 0.28. It still is rising out here. What does it need to close below? What's the unchanged line out here? It's right around 104, 103, 103, about 103.90. I give or take a few pennies out there. So 103.90 would be a real key level if you see it close below that. And it's real close to its zero line here, just like we were taking a look at inside the NQ. And it has a tremendous amount of meaning when it turns down below the the zero line out here. So that 103.90 area, again, I could be off by a few pennies out there, is what you want to watch for inside of the IWM, whether it's today, whether it's tomorrow out here. But at this stage, right now, it is trading down to support. So check back in with me at 4. Well, I guess you can't do that. But check back in with me tomorrow, and then you'll know for sure where we're at. So that's what's going on inside of the IWM, the Russell 2000. Currency-wise, holy shnikes out here. What a movement inside the U.S. dollar index. Of course, a huge basket of currencies out here. Let's get rid of some of these lines, because who knows when the last time it was that I took a look at these out here. Let's get rid of the A to B equals CD pattern. What does this tell us? Well, boy, if we're taking a look at market profiles, this thing is below everything out here. It's below weekly. It's below daily. Right now, what it's doing is coming into a swing point. That swing point is from the trading day of February 11th. That swing point had 49,000 shares, contracts out here. Today, you are at 41,000 The top of that bar is 95.90. The low of today's bar is 95.94. So you're coming into a swing point. You're coming in with good volume. That likely says, certainly if you close inside of 95.90, you're going to go test low 95.28. If we go take a look at the actual currency pairs themselves individually, if we go take a look at the euro versus the U.S. dollar, this thing has had just one huge move out here. Now, if we turn off our profiles, let's go ahead and do that. Give me a moment to do that. We're going to see we've got a few wide-ranging bars that are suddenly sticking out here. You've got this wide-ranging bar all the way back from December the 3rd out here. Big wide-ranging bar, big key reversal, big old everything off of those lows. Every time that prices come back into that area, well, you know, not necessarily. Let me restate that. I don't like to price traded into this level for quite a period of time. This, I'm referring to this wide-ranging bar from December 3rd. It traded all the way into it, all the way up until February 3rd. So for 2 months out there, and then price went ahead and took off. Right, we don't have any volumes for for currency pairs out here, and that means that reading the bars, understanding wide-ranging bars, patterns out here are going to be so very important for us. Now, in the case of the euro, interestingly enough, we can see this is a daily chart that we're looking at. Here's the here's the price oscillator. Let me just expand it up for you, make it a little bit easier for you to see. Let me get rid of the volume, right? That's why it's empty to the downside. There we go. This is better. Now, the interesting thing here, we saw price moving down, right? We saw price moving down. I'm looking at the top portion of my screen from February 12th, right? It starts moving down. What does the price oscillator do? It's also moving down. Who was leading the party? Who was doing the tango out here? Look, when you have the price oscillator moving down out here, you can anticipate, you can expect price to continue moving down. Where did it move down to? Interestingly enough, it moved down right where to the zero line out here. That zero line, let's go ahead and make that yellow. It'll be a little bit easier for you to see on your screen out here. So there is the yellow line. So we can see that it got right down to that yield sign out here. A couple of dojis formed. Those dojis didn't mean a whole lot to me, but this did, because this set of candles, which was February 29th, March 1st, March 2nd, and March 3rd, was what you call a three-river morning star. It's a bullish reversal signal. Yes, it took 4 sessions to go ahead and complete it, very much like the bottom in March of 2009 inside of the Dow out here. I think we had a 4-day. It might have been a 4 or 5 day. I think it was a 4-day reversal pattern just like this. So they're significant bottoms. And interestingly enough, we saw price this morning spike that level of support, which it held, and then it has moved higher. Wide-ranging bars, all the wide-ranging bars, all the way up to the October 22nd, 2015 level, have been to the upside. But price has really not been able to get above the resistance of that wide-ranging bar to the downside that we just mentioned. That, again, being the trading day of October 22nd. So what do we know about the euro? We know right now that the euro has got some significant resistance in the 113.51 level. Odds favor with regard to today not being able to bust it down, right? We saw price move all the way down to the most recent bullish reversal signal. We saw that the zero line, just like when the NQ gets up to the zero line and turns down from there, that is very bullish. Believe it or not, this is also that's very bearish. This, the opposite, with price coming down to the zero line and turning up, is very bullish out here. So the message right now is that we ought to see the euro, in my opinion, head up to the 113.51 level. Could go even beyond that. Pretty amazing going to negative interest rates out here, but at the same time, the currency pair and the charts are what they are. So we can forget about the news and just go ahead and trade the chart pattern. So that's what's going on in that currency. If we go take a look at the Great British Pound, see what it is doing out here, really just no similar pattern to anything that we looked at. We can see its price oscillator still well below the zero line, but still turned to the upside. So this certainly can move to the upside as well. Where could the Great British Pound move to? That would be the question. At this stage here, the only really great tools that I would apply to it would be just take a look at retracement levels. So let's go do that. The retracement level being the high here from the trading day of February 4th down to the low of February 29th. This says, it's almost as if it's trying to complete an A to B or form an A to B equals CD pattern. Let's just say first it's got to get up to the 143.50 level. Then it can make its way up to 144.9, 1.44 at 9 out here, and that is the Great British Pound. Let's go take a look at the Japanese yen. That's trading out at 112.79. I do have a 15-minute delay inside of this currency pair. Really just been chugging and consolidating sideways out here in between the 110.98 and the 114.87 level. There is nothing here to think that it's going to do anything other than that. At this stage here, it's rejected the highs, but price oscillator still to the upside, so we're not seeing a ton out here inside of the Japanese. Yeah, not that it didn't have a big move. It did, most certainly, because it traded to as high as 114.44 earlier in the trading session. Right now, we've got the Dow off 123, S&P's down 13, Composite down 49. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got the Dow's off about 111 or so. Now, we've got a really interesting setup here. So I'll leave you with regard to what to be watching here for the rest of the day. We've got a really interesting setup on the 30-minute chart here for the NQ. I'm trying to explode it. Enlarge it is probably the correct word. To explode it would be explode to smithereens, and I don't want to do that. Then I got to go run out and buy a new screen. But we are going to blow it up so you can take a look at the hammer candle that formed during that session that ended at 1:30. So that says, because and the question is, why did it form there at 1:30? Was there any support inside the NQ? I didn't see anything when I went ahead and looked real quickly. We saw the support of the ES Mini, the S&P futures contract, which has held at that 1974 level. So maybe that's the correlation that is going on. We took a look at light sweet crude, moving up during the past hour or so out there. So that should provide a bit of relief, from the move down. The reason why I bring up the hammer candle, we know that the NQ on its daily chart, the daily chart, price oscillator turns down below the zero line, right above, it doesn't get more, there's no more bearish message than that. If we take a look at what's going on now, we just jump down to a 30-minute chart, just looking for signals out here. You and I know, at least I know, you know that too. We have an expression here at TFNN, or a Stevie expression, and that is if you close below the low of a hammer candle, if you're long, you're wrong. Well, now we've got another data point. So I don't know what the market is going to do during the next 2 hours. A little bit longer with regard to this during the next 3 hours, right? 3 hours and 15 minutes, 3 hours and 19 minutes to be exact out here. If you see a close below that 4229.75 now, you've just got another message because you've seen a close below a hammer candle. If you're, in essence, again, that nice little rhyme, if you're long, you're wrong. Now, if you're long, you're wrong means what? Now, we can't see. Why did price stop where it did stop? Well, it's pretty simple. When you and I were looking at those candle sessions inside the euro, we would do the same thing on any time frame chart out here. Take a look at where the breakout, in essence, began inside of the NQ. And this is back here on the trading day of March the 1st, right from 10 o'clock in the morning for the rest of the day out there to 1 o'clock in the morning. And we can see that price came right back to where it broke out, right? You like to buy breakouts. You like to say breakdowns. Am I saying to buy this right now? No, I'm not saying that. I'm saying if you're not in a position, neutral is the position in cash because you're not being charged by, our Fed's not charging you to hold that cash in your bank. Otherwise, get a safe, get some mattresses out there. But at this stage here, price inside the NQ has come right back to a level of support, 42.39. If, in fact, you see a close below the hammer candle low, well, at this stage, you've just got to go back to the prior set of swing points. That says somewhere in the 4180-ish level to all the way down to, now we're starting to have somebody, we've made it thus far without any system problems, which is really good. I put more money in the machine out there, but 4080-ish would be the level where you'd be looking for price to continue to move to if you see that break inside of the hammer candle. Price just coming right back to a level of support. This is kind of interesting out here. We have been taking a look, or I have been taking a look, because you and I really hadn't done it, but I have been taking a look at this descending price channel inside of the ES Mini. And it broke out here at about 8:30 in the evening. That was yesterday. Price came back earlier during the morning, about 2 o'clock, came back and tested a breakout of descending price channel and rejected it and did what? And it moved higher. Of course, price broke back into that descending price channel here at 11 o'clock this morning. And when you get back inside the channel, you go back and you test the bottom of it. I haven't touched this. I actually just kind of popped it up on my screen because I was looking for hammer candles or any kind of reversal signals, and it was in the NQ that it popped out. But notice how price actually went down right to that level of support. Now, price has been traveling a descending price channel. Maybe price goes and tests the top of that in the 1985 type range out there. 1979.25 would probably be it. Hey, we roll over these contracts tomorrow, so tomorrow we'll start looking at the June contract. Stay tuned because our man, David White, is up next. And on Thursday, we got the Tom O'Brien Show and Andy Heck. Have a great trading afternoon, and I'll see you tomorrow morning.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.